Volume is one of those things every trader talks about, but very few actually know how to read correctly. And that's exactly why so many people get trapped buying tops or selling bottoms without understanding what's really happening behind the scenes. Price can move up or down on the chart, but volume tells you whether that move actually has commitment behind it or not. In this video, I want to show you how to properly use one of the most powerful volume indicators available for free on TradingView and combine it with clean price action, so you're not guessing, you're reacting to real information. I'm talking about the volume flow indicator, also known as VFI, created by Lazy Bear. So let's start from the beginning. I'm on TradingView, I click on Indicators, and I search for Volume Flow Indicator. This is a very popular indicator on the platform for a reason. Once I add it, you'll see it appear below the chart as an oscillator. Before we do anything else, we need to adjust the settings properly so the indicator behaves the way it's supposed to. Since I'm using an intraday time frame here, I go into the settings, and first of all set the coefficient to 0.1, which is exactly what the author recommends for intraday use. Then I turn on Smooth VFI so the line becomes cleaner and easier to read, and I also enable Show Histogram so we can visually see momentum shifts more clearly. In the Style tab, I slightly increase the opacity of the lines and histogram so everything is easier to see while explaining. Now that the settings are done, let's talk about what this indicator is actually showing us. The green line you see is the VFI line itself, which represents volume flow, and the orange line is the signal line, which is simply an exponential moving average of the VFI. This indicator is built on the concept of on-balance volume, or OBV, which is commonly used to track smart money activity, but instead of showing cumulative volume like OBV does, VFI transforms it into an oscillator, similar to MACD. That's why it moves above and below a center line, which is the zero level. When the VFI line is above zero, it tells us buying pressure dominates. When it's below zero, selling pressure dominates. Crossovers between the VFI line and the signal line show momentum shifts, and those shifts are reflected visually in the histogram. But the real power of this indicator is not in simple crossovers. The real power is in divergence, because divergence shows you what price is hiding. Let me walk you through the first buy example step by step. Here on the chart, price is clearly in a downtrend. We have lower highs and lower lows, so structurally, the market is bearish. Now price pushes down again and makes a fresh lower low. At this moment, we look at the VFI. This is where most traders don't look, but this is where the information is. You'll notice that while price made a lower low, the VFI line did not follow. Instead, it printed a higher low. This is a bullish divergence. This tells me that although price pushed lower, selling volume is not increasing. In fact, buying pressure is quietly building underneath the surface.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
This is usually where institutions start accumulating positions, while retail traders panic sell. But even here, I do nothing yet. I don't buy just because I see divergence. I mark the last lower high of the downtrend and wait. As I continue the replay, price starts moving up and eventually breaks above that marked level and closes above it. That is the structure break. That tells me the downtrend is no longer intact. This is where I enter the buy position. My stop loss goes below the recent swing low, because if price goes back below that level, the setup is invalid. From here, I simply let price play out. You can see how price transitions into an uptrend, confirming that the volume signal was not random, but intentional accumulation. Now let me show you the second buy example. Again, here we can see we're in a bearish market. Price is trending down, emotions are negative, and most traders are looking for sell trades only. Price pushes lower once again and makes another lower low. We pause the chart here and immediately check VFI. This time the divergence is even clearer. Price made a strong lower low, but VFI prints a significantly higher low compared to the previous one. This tells me selling pressure is clearly weakening, and buyers are stepping in aggressively behind the scenes. Once again, we don't rush into a trade. We mark the most recent lower high and let the price move. Price moves up, breaks above that level, and closes above it. That confirms the structural shift. This is my entry. Stop loss below the swing low. As price continues, you can see a strong upside move unfold, validating the divergence and the structure break working together. Now let's move to sell setups. In the first sell example, here we can see the price is in a clean uptrend. Higher highs, higher lows, bullish sentiment everywhere. Price pushes higher and prints a new high. I pause the replay here and look at the VFI. You'll notice something important. While price made a higher high, the VFI did not. Instead, it printed a lower high. This is bearish divergence. It tells me that despite price going higher, buying volume is actually weakening and selling pressure is starting to creep in. But again, I don't open a sell position yet. I mark the last higher low of the uptrend and wait. As the price continues to move on, we see the price starts pulling back and eventually breaks below that marked level and closes below it. That confirms the structure break. This is where I enter the sell position. My stop loss goes above the previous swing high, because if price goes back above that level, the setup is invalid. From here, price starts rolling over and transitioning into a downtrend, confirming that the divergence plus structure break gave us a high probability sell trade. Across all three examples, the logic never changes. VFI shows you what volume is doing behind the scenes, and price action gives you confirmation. You never trade divergence alone. You always wait for structure to break. This combination filters out a massive number of false signals and keeps you aligned with real market intent instead of noise. And no matter how clean the setup looks, risk management is non-negotiable. No indicator is perfect. Losing trades are part of trading. This is what allows you to stay in the game long enough to catch the high-quality setups that actually matter. That's the complete way to use the volume flow indicator with price action. If you have questions, leave them in the comments and I'll answer them. And if you haven't subscribed yet, make sure you subscribe and turn on notifications so you don't miss the next breakdown. Thanks for watching the video till the end. I'll see you guys in the next video.